Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals, and gold prices saw a big jump on Monday. Gold rallied, close to $20, pretty much erasing all of last week's losses. And it seems to me that the gold markets has gotten its legs back under it, whether it be by fear, whether it be by greed, whether it be because equities are getting hammered, whether it be because the dollar is lower. There's a lot of what ifs out there, but ultimately I think that the risk-off trade has fueled some speculators back into the gold market, has fueled those that are maybe a little weary of the fact that volatilities are on the rise in the equities and not so much in the treasuries. I think that there's just that uncertainty that we've been talking about, and that the world has kind of been watching. Is it going to be economic revival, or is it going to be inflation, or is it going to be GDP expectations on the rise or in the decline? Too many questions, and I think gold right now is finding some favor, and you're starting to see that, and today was a big day for gold. If you look at the dollar was kind of flat today, maybe a modest uptick, but nothing that would really cause gold to buy off or rally or sell off or rally. But I think that the big thing here is that it's a risk-off trade, and I think that that's also what's kind of holding the dollar steady. Note that the dollar has not been very much favored to the euro, to the pound, to the yen. So I think right now that could be some of those unwinds which are keeping the dollar relatively flat. Not seeing a whole lot out of the dollar today. Certainly nothing that would cause gold to propel $20 higher. But one thing that would cause gold to go higher is the speculators. And as we talked about last week, speculators got out before the Fed meeting and slightly after, so they were exiting their longs. And it looked like that gold was going to start to hit some new lows, and then wham, gold prices started to rally. And I think those speculators that had gotten out early, prematurely, or maybe just around the Fed because of high risk, they got back in with both feet, and we're already seeing gold speculators as long as they were back in January. So there is a big push here from speculators to get back in the market. One of the reasons we've seen this big push, I don't think that was behind the trade today, but certainly behind the trade last week on the down trade. I think late Friday, you probably saw a lot jumping back in. Late Thursday, when prices weren't so attractive, you probably saw them getting back in, but certainly now we're seeing the results of that. And so there's a lot of speculators that are back in the market that are pushing prices higher, and will likely continue to do so. We didn't get above 1350 in gold, but certainly that's a level we want to get back above in order to see a real bullish bias. Certainly we're no longer nearing the tightrope that would cause us to go bearish. We're still sort of neutral with a bias towards bullish. We need to get above 1350 with a settlement there, and then ultimately our target's 1370. If we get above that with a settlement, look out. We're talking 1400. Not too long ago I mentioned that was a possibility, and then the market sold off, so I don't want to get ahead of myself here. But gold right now is starting to find favor. Big move on Monday. Need to get a settlement above 1350 to start to talk about how bullish we are in gold. That may happen tomorrow, or if we get a weak number on Friday, or Mr. Powell says something adverse to what his policy has suggested. So right now, gold looking good, but not quite there yet. This is Todd Colvin coming to you from the floor of the CME Group.